Okay, we want to get you caught up on the markets right now. It's obviously a huge market day. You can see here the Dow is off the session's lows, had been down more than 300 points. Right now, 282 points, about 2.5%. The NASDAQ had been down by triple digits. Right now, it's down 85 points, approximately 3.33%. And the S&P right now is down a little better than 3%. CNBC's Mary Thompson joins us from the New York Stock Exchange with more on today's big movers. Mary.
Hey there, Melissa. You know, I was speaking to some traders. They say really at this point, especially after the big declines we've seen in the markets over the last 2 weeks, the market looks exhausted right now. Now, if there is any positive and near-term positive to come out of the debt downgrade, they say it hasn't turned into a credit event yet, meaning there is still demand for U.S. Treasuries. But yet, they emphasize the word yet because there are still concerns that it could eventually turn into one should there be further downgrades and people start to turn away from U.S. Treasuries. Now, that being said, what concerns investors here is that despite the S&P being down almost 15% from its April highs, the value investors are not coming in and nibbling around the edges. They say every time we make an attempt at a rally, the institutions lean on it. And because of that, they say basically you're in a situation where you don't want to catch a falling knife, meaning they don't see anything right now to put a floor under this decline that we have seen over the last couple of weeks. So a very negative tone, although we are off the lows of the day. The market is extremely oversold, but sentiment right now is very, very negative. Bill, back to you.
All right, Mary, thank you very much. Treasury Secretary Tim Geithner confirming to CNBC he will stay on in his position. As you may know, he had considered stepping down after the debt ceiling was raised a week ago. He also spoke to us about the chances of a double-dip recession in our economy. CNBC's John Harwood joins us from Washington with more on his exclusive interview with the Secretary. John?
Well, Bill, that is the deeper question underlying the market turmoil and even the debt downgrade. The key is how do you get this economy growing and whether, in fact, it's going to grow only 1.3% in the second quarter. And I asked Secretary Geithner whether, in fact, he thought a double-dip recession was possible.
I don't think that's likely, John, but it depends on the quality of judgments that governments and central banks now
Can't
make
rule it out,
around the world. Again, it just depends on what governments and central banks do. Again, if you look at the world has slowed, growth has slowed, but there is a lot of room for central banks and governments to act in order to help deal with the pressures we're still seeing around the world. You know, I know there's this perception out there that there's no room for policy anymore. That is a deeply mistaken perception. In countries around the world, not just the United States, we have plenty of room to move and do things that would help make this economy stronger in the short term, and it's our responsibility to do that.
And, Bill, I think the significance of those remarks can't be underestimated. We haven't talked about them a lot in the aftermath of that interview yesterday, but notice he said governments and central banks.
Right.
We've been talking this morning about, you know, whether you could have a QE3. I followed up and said, is there still a role for the central bank to play in easing monetary policy? He said, of course there is. I believe he was talking not just about the European Central Bank, of course, which is acting, but also the Fed. So it's going to be interesting to see what the Fed does in response to what we have seen in the markets and this increasing pressure on the economy.
Maybe a very public hint to Ben Bernanke and company to do something about this.
Exactly. And, you know, the Fed's an independent agency, but we know that Ben Bernanke and Tim Geithner have been partners in trying to respond to the financial crisis ever since the fall of 2008, when Tim Geithner was at the New York Fed before President Obama was even elected. They continue to work together. Of course, the president reappointed Ben Bernanke. He'd been appointed by George W. Bush, and we'll see whether or not they continue working together and trying to figure out whether additional steps on monetary policy are needed right now.
John, any hint what those steps would be? Because, of course, that has been our discussion all morning long, is what could the Fed possibly do? What would a QE3 look like? Any hints from them?
I haven't gotten any hints. I would yield to Steve Leisman, who was on our air earlier talking about the no end to the creative possibilities of facilities and, you know, other steps they could take. But I don't know exactly what those steps would be.
All right, John Harwood, thanks so much.